Okay, cool. So this is an example of an A plus setup. This would be a Wyckoff distribution. As you can see right here, I'm on the 15-minute time frame. I'm not going to show you the 4 hour time frame because you would be able to understand whether you're in a premium or a discount based on if you draw the Fibonacci on the 4 hour time frame, you'll be able to see where in the range you are. So just pretend this was a 4 hour for a second. You just draw it from the top to the bottom of the range, and you would see where am I in that range? Am I leading up towards the 50% or is it the inverse? Cool. So where you once you've established where you are on the 4 hour, you'd come down to the 15-minute, mark out the start of the day, which is obviously you've got the indicator to show you the start of the Asian range. As you can see right now, I'm on the Nasdaq. So the Nasdaq is like it just has 1 hour shorter in the day for some reason. But if you're trading gold or if you're on a Euro USD chart, GBP JPY chart, obviously the quarterly theory applies. So the start of the Asian range would probably be about 6 p.m. New York time. So this is the start of the Asian range, and obviously this is the end. Okay, essentially, this is the day that we're trading. So we're day trading. This is the day that we're trading on. All right. So cool. Quarterly theory. I don't know why it's not showing up right now. Why is it not showing up? Hold on. Let me X this off. Then let me come up with this. Day quarterly theory. Add that on. Still not showing for some reason. All right, cool. We'll do it this way. Delete this. Quarterly theory is every 6 hours, yeah? So at 6 p.m., if we go to 12, where's 12? Midnight. That's 12. All right, cool. So we're looking at the timings, yeah? So 12 is the start of the day, the true open. I'm going to do it in like a really light gray color. And then the next 6 hours is going to be at 6. Then the next 6 hours is going to be at, oh, going to be at 12. Next 6 hours is going to be at 6. And then the final 6 hours is going to be at 12. Cool. So, right, there's your quarters. And as you can see, the market respects each of these quarters because each of these quarters does a separate thing in terms of accumulation, manipulation, and then distribution. In other words, it will be choppy and then it will do a fake out to take out liquidity before it then does the real move. So let me take this off for a second because, like I said, this is the Nasdaq and it loses an hour. So if you were looking at this on an XAU USD chart, the Asian range would be at the start of this grey line. So what are we looking at here? As we know, we have the accumulation and then we have the manipulation and then we have the change of character before the distribution to take out this low, right? So a pattern that looks something like this. Can you see how this reflects that in these quarters, right? So here between these ranges, so we have the Asian session, the London session, sorry, we have the Asian session. So the Asian session is here in the NASDAQ. So the Asian session, the London session, the New York session. All right. So we have some choppy movements. We're making higher highs, high lows, high highs, high lows. Essentially, before we come up, manipulate, come down, and then probably on a smaller time frame, make some sort of. Can you see how that reflects that, right? It looks identical, but you just have to notice the pattern. Let's actually analyze how this trade has been taken. So what I'd like to do is you have to look out for session liquidity. So in each of the sessions, so in the Asian, let me actually write this out. Asian, London, and then New York. Okay. So accumulation, manipulations, but can you see how the manipulation from the London carries over into some of the New York, right? Carries over. But this is what we call a fake out. So it likes to draw on liquidity from previous session highs or lows to be able to then fuel up. Yeah, the market needs to fuel up. The banks like to, manipulate. It's called SMT. It's a concept called SMT, smart money trading. When you trade like the banks, you like to manipulate all the liquidity that is resting above these old highs and old lows and old highs and old lows. Okay. So when there's session liquidity and things, you have to think, okay, these are targets. Session liquidity are always targets. So what I like to do is on the 15-minute, right, when I'm doing my analysis before I actually go down to the 5-minute to then execute my trade, I'm marking out the Asian high, another high, another low, a lower high, a lower low in London. So this is London high and the London low. And so cool. Now when I'm coming onto my chart at the New York session, so I'm going to be analyzing my trade, well, coming onto the charts maybe around about this point in time, and I know that I want to enter after around 9, which is the start of the New York session. The true open is at 9 a.m. between 7:30 a.m. and 9 a.m. New York time. I like to trade more so around 9 a.m. between 9 and 9:30 because that's when I find like the move always really happens. Depends what pair you're trading though. I've been analyzing this long enough to know that this is what happens with the Nasdaq, but if you trade a different pair then you can obviously see the difference. But it's cool. Now that I've identified the market has, what has it done? It's come down, da, 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 come up, and what has it done? It's taken out this high. So once it's taken out the Asian high, liquidity has been swept. Just do a green line. Liquidity has been swept, right? This is a liquidity sweep. It swept that. Now, as you can see, it starts wicking to the upside. If we go down to the 5-minute, right? Find this. Can you see how there's a lot more detail? Starts wicking to the upside, right? I wouldn't be able to go down to the 1-minute time frame right now because that would just take too long for me to find. But essentially, as you can see on the 1-minute time frame, if you were to go down to a 1-minute time frame, you would see something that looks like this. Cool. Oh, I didn't mean to do this last bit. Cool. It would look something like this on the 1-minute time frame. You would see, first and foremost, it comes down, wicks, comes up, which would be this move here. And what you'd identify right here, let me make this bigger. Can I actually make this bigger? Ooh. Right, let me just leave it. You would identify right here, what is there? A change of character takes place, which is a confirmation on the 1-minute time frame that we're about to start tanking, right? The market is now taken out the Asian high. What is it? What's left? this London low. So it's going to want to come down to be able to take out this low right here. So we're going to target this low, okay? The range, so if we go down to the 1 minute time frame, now we're executing, okay? So we can see that the range has been formed. So once this change of character has taken place here, this is the range. So what we're waiting for is a minimum 3 candle pullback. Once we see that the candle has pulled back 3 times, what we're doing is we're looking for an entry now. Okay, so the entry is going to be 50% of this range. Entry is going to be 50% of that range. Then we put on our position. Entry at the 50%, stop loss above this high. And then we're going to be targeting the low. So the low is going to be here. This is the low we're targeting, right? So if we got in somewhere here, and this is the actual pattern, right? From the top of this, we're seeing a change of character take place on a 1 minute time frame. See, the 15 minute is, sorry, the 4 hour is good for identifying the daily bias. Where's the market going to go right now? 15 minute, okay, what is the daily range saying? What is the day saying? Okay, where's liquidity being printed in each of the sessions? The 5 minute is looking for small shifts of character. The 1 minute is for execution, precise entries, right? So we've got this range on, right? We've drawn our range from this low to this high. And then we're entering at this 50% level. Stops above this high. Yeah, this high of the range. Whatever the range is on the 1 minute. We're targeting this low. Simple. What is this? It's a 1 to 5 risk to reward ratio, 1 to 5.2. So if I took on my range now, it might draw back up into the red a little bit. But boom, it should just melt straight down to TP. And there you have an example of an A plus setup. Okay. Yeah. Remember, liquidity always needs to be swept. Wait for liquidity to be swept. If liquidity hasn't been swept yet and it's not aligning with what the higher time frame says, do not enter. Okay. If you haven't got a pinpoint entry, knowing exactly where your stop loss is going to be and knowing exactly where your take profit is going to be, do not enter, because otherwise you will just lose money. Right.